Hey guys, coming at you with another market update for October 1st, 2020. We're looking at the SPY, S&P 500 ETF here. I want to talk about a correlation that I've noticed over the last couple of months. If you've been following me on Twitter, uh, you'll know that I've been talking a lot about the precious metals, specifically gold, being a leading indicator in this market. And what I'm seeing now is kind of predictive of where I think we're going. Um, I do think we're headed lower in this cycle. I think we'll bottom out some point before the election or right around the elections. But I do think we still have to shake out the still very large amount of retail that is in this market. Remember, the Fed does want the market higher, but the Fed also does not like volatility. And volatility comes when you have bubbles and you have people buying Tesla and Apple and Nvidia, and they're buying out of the money calls, and what happens is the market bubbles up and then it crashes, and they don't want crash. They want the VIX low. They don't want this kind of mania phase. So I think the market is going to shake some of that out. It still has a little ways to go before we get to more normalized levels here. So I'm going to show you this first comparison here, and this is from last week, but it's still really the same trend. So you notice how this purple line here is a GLD, and you notice ever since June, it's really been a leading indicator for where the market's going. You see here, towards the middle, back end of May and into June, you had the GLD dipping a little bit here. Remember that big wedge pattern it had before it broke out, and the spider was kind of in a parabolic mode here. And then what happens? It crashes back in. GLD starts to rise, gold here, and spider chops around. Eventually, GLD peaks, and the spider continues going, and then GLD crashes a couple weeks ahead of time. Then SPY, big correction here, more chop. Now they're both chopping kind of in unison, although gold is underperforming a little bit. So from my guess is, if this correlation holds up, gold is telling us the market wants to go lower. Where do I think we're going? Right here. 300, 310, right at this pivot, 200 moving average. We could possibly backtest 300. I believe I saw something, maybe it was on Zero Hedge a week or two ago, that the actual monthly VWAP is actually at about 300 right now. So that's, pretty big gap still. But I think that 310 is our likely target. If the market really wants to flush, if there's, lots of uncertainty with the election or stimulus isn't getting done, it could probably get down to 300. So as of yesterday, I did add to my DXD and SDS positions, and I will probably consider adding QID today. If we can get up into the gap fill area on the Qs, which is about, I want to say it's 283.50. If I just get my charts to come up here, let's see. And of course, thinkorswim's giving us trouble here. But anyway, we are near gap fill here on the QID, or excuse me, the QQQ. And I'll show you that as soon as that comes up. That's the area that I'm looking for to short. There we go. Let's see. There, okay. There's the gap fill right up there, 283.50. It looks like it wants to go there. And really, part of the reason why I'm not buying this rally and why I have no problem shorting up here, notice the volume, specifically on the buy days here. I mean, you're having a little bit of volume here off the lows. You can see a little bit better on the SPY, actually. So we have increasing price from the lows, decreasing volume. Now, you might say, oh, yesterday we had lots of volume. Look at this. Yes, we had lots of sell volume. If you look at the 10-minute here, we can see, look at all this volume. This volume here between these 4 or 5 candles probably equals out to more than half the day here in volume, just from the sell bar here. So this tells you that institutions are really skittish right now. There's not a lot of funds, investment banks, etc., people with lots of money. There's not a lot of people pushing this market higher. This is kind of in float mode. This is in float mode. All right. The high volume right now is to the sell side. Okay, I want to be clear on that. So shifting gears a little bit, a couple of charts I like on the sell side. A few bearish patterns. This one here on Hyatt, really nice inside bar below both moving averages, kind of just chopping in here. Market flushes out. This could easily get down to $46, $45. Another hotel, same kind of pattern here, Marriott. Another inside bar below all the moving averages. Really nice pattern there. I'm still short. Let's actually just look at the crude because USO is so hard to see with all the moving averages. But so looking at crude here, I'm still short via USO puts. I just got back in the money today. And yeah, this thing wants to get down to 35. I mean, it's going lower. It's off the lows today, but I mean, this thing is ultimately going lower there. The Chinese purchased a lot of oil back in March, and the inventories are just really terrible right now. I mean, it's good for the tanker stocks, but bad for oil companies. Energy is the worst sector of the S&P 500 right now, and that's probably going to need another flush before it's going to be ready to make any sort of recovery. So I am still short oil, and I do, I like the position where I'm at. To the long side, you guys know I'm in the pot stocks, but I want to talk about Bitcoin just really quick. I do find this wedge pattern very intriguing. So you notice this falling wedge, which is a bullish reversal pattern, and it coincides really well with the this old trend line here and the back test. I mean, like if you look at this right here is even more bullish because here you have the falling wedge, but you also have the breakout and now a back test. I think this is actually going to push higher in the very near future. So that's something to keep an eye on. As far as the pot stocks, I want to talk about Tilray and Aurora. So we'll just get up Tilray here. I noticed Tilray 2 days ago, huge volume buy, huge volume, then some consolidation. Again, big volume coming back in. Again, this is going with the thesis that I talked about last week. There's institutions that are going to hedge against a Democratic sweep. And I mean, honestly, they're probably going to legalize it anyway, but in this environment, it makes sense to be hedged against these types of things. Who knows how the debates will go? Who knows? They could talk about, I mean, they did have a vote last week that got postponed on legalization of marijuana in the House. They might bring that up in the next debate. This is something that can run very quickly and very easily. So you see the accumulation here, even today it's stabilized, it's off the lows. Same thing with Aurora. Big pop a couple days ago, pop in the morning, and now it's actually curling back up a little bit. So there is buy volume in this. These things will run, and when they do, the shorts are going to run for the hills. I'm telling you. This sector is very heavily shorted. Probably shorted more than energy, honestly. So when they take out these key resistance areas right here, $5, $6, the covering is going to cause this thing to run. You see how this can run when it does. It's going to be pretty huge. And I'm excited for this. So that's about all I've got for today. You guys have a great rest of your day and good luck trading.